Hello, and welcome to the Fintech Surge podcast, the first fintech podcast from the Middle East for the Middle East. I'm excited to be joined today by the one and only Vikram Pandya. Thank you for joining us, Vikram.
Thank you, Steven.
Thank you. And for those who are unfamiliar with Vikram, he's a fintech influencer with more than 15 years of experience across banking, startup consulting, academia, and venture investments. And he is currently the director at SP Jain Global. He's the founder of the Association for Emerging Technologies, which is a nonprofit initiative, and is heading the research at fintech-focused VC firm Veranium. So I kind of wanted to, as the expert of fintech, I just wanted to hear in your simple terms, what is fintech to you?
Sure. So when we look at in a simple term fintech, that is nothing but use of technology in design and delivery of financial product and services. To give some examples, let's assume that when we are driving a car and when we ask Google Assistant or Siri that, okay, Google, find me the nearest restaurant, that becomes your pure tech part. But the moment we say, okay, Google, book me a table at the nearest restaurant and pay for that, then that journey becomes fintech journey because there is a component for embedded finance. And that is the fintech in nutshell, what you can understand.
Great. And for our audience, what do you think is the most common example of fintech improving everyday life within the UAE currently?
Sure. So I have seen UAE journey since last few years, and when we look at right from payment to lending to wealth management and insurance, all these four areas are developing very rapidly. And specifically within that, when we look at payments, the day-to-day life of an individual, you normally have 8 to 10 transactions on an average. And when we look at the ease of payment, right, the moment you can make micro transactions, the moment you can do certain buy now pay later transactions, you can increase both wallet size as well as ease of transaction will increase the sales revenue for the merchant. And this is number one, in my opinion, the change that I have seen. And second change, of course, rise of the super app, like let's say Karim. So you know that in UAE, when we look at the transactions are connected in a way, right? So why somebody may want to pay, why somebody may want to borrow, why somebody want to invest. So if you have an ecosystem around it, like Karim, or there are many more neobanks also in UAE, like Rise. Now, when we look at all these different startups, they are creating this new approach where ecosystem approach can help them cross sell the product, and by doing so they make sure that these individuals are getting hooked into their ecosystem and then they are able to grow in future.
Yeah, absolutely. And from personal experience, I can tell you that the UAE has quickly evolved. I've only been around the region for about 7 years, and I remember going to the mall when I first got here, and not every merchant within the mall accepted credit cards. And now I can literally WhatsApp the grocery store downstairs, and they come with a credit card machine every time. So it's a lot easier to get services, and it's a lot easier for merchants to deliver services pretty much across the UAE to a large spectrum of people who otherwise they would have had to close their doors to.
And just to add to that number, when you look at in 2020, the latest number that I had, around $19 billion worth of payment happened. Okay. And that payment has grown almost 2x during the pandemic, as you can understand, and it is increasing rapidly. Second advantage that you have is partnership that UAE has done with, let's say, UPI very recently, right? And when you look at from that perspective, even more better payment solutions, payment instruments will be available soon. And the big migrant population in UAE will be able to do many more transactions by making sure the cost of transaction goes down. And it is much more easier for everyone to use, even if they don't know English, they can use it in local language. All those are the benefits.
Yeah, absolutely. And so obviously, clearly, you're very knowledgeable in fintech, and I think your CV speaks for itself. So tell me a little bit about your journey into tech. How did you get into the space, and when did you start embracing the space of fintech?
So when we look at the journey of fintech itself, It started around, let's say, 2009-10, mainly after the global financial crisis, where banks were busy in doing the compliance and the customer experience was not that much of a focus. And suddenly, this new age tech companies realized that, okay, we can make sure that the banking as a service is given to the customer. And by doing so, the customer centric approach, the experience around the product can be much better. And when that happened around 2010-11, I was working in a bank in India, and I saw that as a new opportunity. And I personally, as a customer, also was feeling the same thing, that when you look at the banking experience itself, right, it is not something which is enjoyable. And the moment you look at the fintech, the way customer centric approach is created, and you can identify the opportunity immediately that yes, this is going to fly, because ultimately banking as a service is required, but banks are not. So banks are becoming utility company in a way, and this fintechs are becoming distribution arms for them. And in 2013-14 mainly, I started looking at, in India specifically, these new fintech companies which are coming up from the partnership perspective, because I was part of the senior team for the strategy. And when we were looking at this new fintech partnership, I got involved in that. And by doing so, I started even understanding more about this industry, what works, what doesn't work. And by 14-15, I started my own consultancy also within the fintech area. I started this program called Fintech for Professionals, specifically to make sure that the working professional who are with, let's say, 15, 20 years of work ex, and now they want to shift into fintech industry, they can understand this fintech better. So I started this program in 2017, for which I'm director right now. And this program has already served more than 500 very senior people. And we look at more quality rather than quantity. So it is the live program where we try to make sure that people understand about these nuances. So this is the entrance point for me. And then I started investing into the startups, fintech startups specifically, because if you look at the overall ecosystem, it makes sense to then start from the sourcing to then investing. And as a part of ecosystem, I have created this association for emerging technologies, where I help this new emerging fintech startups in lowering their overall cost by making use of new technologies, right? So this is the 360-degree coverage that I wanted to do, and thankfully I'm able to do it.
That's great. Yeah. And one of the things that I picked up from your journey was that you kind of recognize that fintech is something that really touches everybody, right? It's not something that is specifically reserved for banks. It's not something that
Correct.
are specifically reserved for, tech enthusiasts, but it's something that really improves the lives of everyday people, in which case it's something for us all to get excited about.
Absolutely correct. And if you look at today, the reality is every company is becoming kind of a fintech company, quasi fintech company, because of the embedded finance journey, right? So I will just explain this term called embedded finance or connected commerce so that viewers can understand. Whenever we look at any journey, any product journey, let's say you are trying to buy a ticket and fly out of UAE. When you are buying the ticket, now as a part of that journey itself, if you are getting EMI, which is the lending product, if you are getting insurance, which is again a different fintech product, but your original purpose was to book a ticket, and this air ticket that you are booking is the journey that you are taking as a user. But as a part of that journey, you are able to add now this different fintech product, and this becomes embedded finance or connected commerce. Because of API, application programming interfaces, you can today connect two different systems together without having great integration effort. And this is changing the way today the banking business is happening, and everything as a service model is coming up. You look at AI, ML, all these technologies one side, and then you look at industry use cases like payment, lending, insurtech, and wealthtech. All these things are coming together and are becoming individual embedded finance product, which can be put into any user journey.
Yeah, that's great. And so, and I love that example that you use of my goal was to travel from point A to point B, and because of fintech, now we can all of a sudden have the payment online. We can have the insurance attached to it. You can even have like a hotel or a car booked on place on the spot whenever you arrive there, and also you can pay for it before you even show up. These are all things that literally 10 years ago would have almost been impossible, and now it's basically a seamless journey to get to point A to point B, plus all of these things that fintech can add to your experience.
Definitely, and just to add to what you said, right? So more and more businesses are realizing that you need to be there where the customer is, right? Customer
Mhm.
may not come to you, customer may not be able to discover you. So today, majority of these fintech journeys are embedded journeys where customer may not know about that company, but because of the partnership, overall ecosystem is growing, right? And
Yep.
even banks today are looking at this all small fintechs and large fintechs as a partner rather than competitor, because they know themselves that they cannot distribute everywhere, they cannot have cost advantages in some of the areas. So banks are very happy at handling corporate connections and corporate businesses, while they are saying, okay, in some of the retail side where we don't have our expertise or we can't provide that experience, we are not agile enough, we will partner with fintechs, let them handle the distribution part. And that is what we have seen everywhere, including India, UAE, Singapore, US. This is the reality.
Right. So in your opinion, do you believe that banks are welcoming and embracing fintech, or do they sort of see fintech as a threat to their day-to-day operations and how they've been managing their business for years and years?
Very interesting question, because as I mentioned, most of the cases they are looking at them as a partner, but there are certain areas which they are very protective of, right? So you know that businesses where you have very high margins, and if you are happy to give small margin and let someone distribute it for you, then they are happy, because this retail lending product are like that. So they are more than happy to do that. But then there are certain businesses where the margins are smaller, but value wise it is very huge. So volume is small, value is large, and margins are, let's say, medium to low. That is where banks are not partnering with fintechs. Rather than that, they are focusing on this business areas by their own. And one more example I will give you. When you look at on the fintech side, today all these small retail customers that fintech can bring is mainly because of the customer experience that they can provide. And they may not want to give customized services, however. It is a mass customization rather than individual customization, right? And even banks, when you look at from the corporate perspective, they give you relationship value by looking at one corporate at a time, because they are the large corporate. So I think it is suitable for them to look at two businesses together and separately as well, where you can identify more margin, you can look at more volume rather than value, then give it to fintech as a partner. Businesses where you see more value, low volume, and lower margins or to medium margins, they are happy to work with corporates directly.
Yeah, great. And so, having said that, what do you think that is the current state of fintech? What are some of the biggest concerns right now that fintech is actually solving?
So when we look at in UAE, let me divide the landscape again, right? When we look at payments and lending, it is already somewhat mature. And when we look at insurance and wealth management, it is still growing rapidly, right? And it is something which is new relatively. So in payments and lending, the major contribution from fintech comes in terms of financial inclusion, because whatever we say, at the end of the day, there are new to credit customer, there are people who may want to transact but are not able to transact, maybe because of cost, maybe because of not able to get the right product which is better fit for them. By making sure that the product is designed specifically for this target audience, fintechs are able to reduce the cost as well as increase the value for that customer. And this is proven in last 4 to 5 years. Even in UAE, you have seen so many neobanks coming up, specifically, let's say, Rise, etc., which are catering to this unserved or underserved population. And globally also, we have seen the similar scenario where this tier three, four cities which otherwise is not bankable by bigger banks are getting serviced by these fintechs. And believe me, this is where the majority of the growth is really. And when you look at the overall pie, because of this new ways and means by which you can service this customer, your overall pie size is increasing, and that is a win-win situation for everyone. And in my opinion, fintech is mainly focused into creating win-win situation for all the partners, right? Whether they work with lenders or borrowers, or whether it is the retail customer, they want to make sure that if they go to bank, maybe the experience may not be similar, maybe the costing you may not get the same one which you are able to give suddenly, because you are doing the risk pooling, much better underwriting using alternative credit scoring or data. So all these things put together creates this new experience for this new to bank customer, new to credit customer. And when we look at the three layers within the overall fintech, right? One is the banking side of it, where entire BFSI is there, right? Banking, financial services put together. Second, you have your entire customer base, whether it is B2B or B2C approach that you take from the business model perspective. Your customer base is the second layer. And then this fintech is sitting in between to connect both this layer. And today, in most of this emerging economies, when we look at or emerging use cases that we look at within this emerging economy, right? Most of these players are working with B2 B2C model to reduce their overall cost initially, and then they are going for B2C model, given that otherwise it is negative unit economics model.
Yeah, so I mean, I think you said perfectly that they're actually lowering costs, increasing value, and increasing the size of the pie, right? I
Correct.
mean, this is just it sounds like a win-win for everybody, and I definitely agree with you with the B2B to C model is, first, you know, in order to scale, put it into the hands of the organizations, the institutions that already have the customers that are already marketing to the masses. So that way, your products and your technology can benefit the most people possible. And then once that's happened, and once you've, really generated the revenue and created, sort of a proof case for the technology that you've created, then you can start marketing to the customers directly.
Absolutely correct. And
Abs-
one point to add there, when we look at today also in India for that matter, right? There are government-led platforms available, like Aadhaar, and you have all this new account aggregator model coming. So in India, you have a unique position where you have all these things available. In UAE also, interestingly, you have again government-led infra available, where this UAE pass, which is a common pass across all the citizen, which you can use for certain things, and this infra really helps you to connect all the services together, right? And going forward, this will become kind of a nucleus for growth.
Okay, great, great. And Vikram, we've spoken a little bit about pay tech, about how easy it is now for customers and merchants to give payments and receive payments through seamless technology. We spoke a little bit about how insurance is able to embed their fintech into other products. That way, it becomes easier and more accessible for people to purchase insurance, for example, the travel insurance. And we've spoken a little bit about digital banking as well. That now we all, I think, have our banking app on our phone. It's easier now to transfer money to people. It's easier to deposit checks, check your bank balance, these sort of things with digital banking. But when it comes to digital banking, what do you think is the next big step? Have we, reached the top of what digital banking will allow us to do, or is there, kind of digital banking 2.0 on the horizon?
Very good question, because this is the exact question which, when you look at all the fintechs across the globe, right, their entire model is around data, right? All the fintechs, when you look at, ultimately they play with data, they try to identify some AI/ML model using which they can cross sell and do all these things. And today, when we look at all these new regulations which are coming across the globe, whether it is PSD2 in Europe, whether in India, when you look at, we have account aggregator model, which is allowing you to transfer your financial data through registered intermediaries in a way. Whether you look at Singapore with their Personal Data Protection Act that they have put, China, or even UAE for that matter, all these different geographies are coming up with their own data protection laws. their own methodology where the data can flow in a regulated manner. And open banking, for example, in UAE, I don't know how to pronounce this, whether it is correct or not, but it is called Tarabut Gateway, and that is the biggest open banking gateway in UAE. Right? So I don't know whether I'm pronouncing correctly, because in India you have Tarbut also. So I'm just trying to make sure it is correctly pronounced. So that Tarabut gateway, if you look at, they are working on this connected ecosystem where through open banking people can then identify use cases. They can understand that, okay, this is what I want to cross sell, whether there is an opportunity to do so. So that is a good initiative in my opinion. And slowly but surely, this small ecosystem players are becoming bigger, and the impact that they have because of that is also becoming much bigger. Very soon, I think, when we look at regulation wise, you will have similar regulation in UAE, which will even have registered intermediaries sharing the data, which is in transit or at rest. All those things will be part and parcel of the regulation.
Great. And as you know that Fintech Surge, the podcast, is actually powered by the Fintech Surge event, which is hosted at the Dubai World Trade Center in October of 2022. And we're excited that part of Fintech Surge is we're going to have a digital banking summit, which is going to bring in 80 speakers, 80 plus speakers from all around the world, discussing the most pressing issues and solutions for financial institutions. So what are you hoping to hear at this year's FinTech Surge Digital Banking Summit?
Great. In fact, I'm first of all very happy that this kind of initiative is happening. And I can tell you one thing which is going to be very critical as we all go ahead and use open banking or digital banking for that matter, right? And first of all, just to make sure viewer understands or listener understands the difference between open banking and digital banking. Open banking simply means that the owner of the data, basically, when you look at, the owner of the data is the user, and bank is the custodian of the data. So open banking allows you to share your data, and this data can be consumed by any partner that a bank has or a fintech that you would like to allow. Right? So that is what happens under the open banking, which means that you are the owner of the data and then you can share it with whomsoever you want. On the other hand, digital banking is more around how to bring entire banking experience itself on digital platforms, making sure that it is more and more digital, automated, and when we look at in the combination of all the different tools available in the market, it becomes easy to use, and wherever and whenever you are trying to use that service, it is available, right? So that is the main difference there. So coming back to this, the question that you asked, what is that I am looking forward to? The question that everyone today asks is that how can we have truly global interface where all this data can get transmitted, transferred? Let me give you one simple example, right? So today, most of this new agreements which are happening, they are happening with the data localization norms. Data localization norms means that one country, whatever data is hosted in that, you cannot share it with outside companies, right? So in this scenario, how to share the data, what kind of data processing can happen, can you have legal brokers, right, or regulatory brokers, which can look at the data, put some encryption on top of it, allow people to let them look at the inferences rather than look at the data itself. What kind of data you can share, in what format you can share it, is going to be very interesting to know. I'm hopeful that this kind of topic can be discussed, given that this is exactly what the future will require. Today, we already see with GDPR in place, with India's PDPB, which is going to be act very soon. In Singapore, as I mentioned, the act is already live. All these data localization norms are having conflicting results. So how this entire thing can work is very critical. On the digital banking side, however, when we look at, we want to understand similarly how this entire experience can become as a service model, and can you have a distribution done directly as a white labeled model. That is another thing I think can be very interesting to look at.
Sure. And Vikram, maybe you can clarify for our audience. went on a little bit about the open banking and how it allows us to really own our data and to be able to share it with whoever we like. Obviously, this is beneficial because it allows you access to more things. That allows the more catered experience, cater specifically to you based on the data that you provide. But I think that this might be something that actually could be a little bit scary for the audience because I think that whenever we're talking about data, especially when it comes to our banking and financial data, this is typically something that we don't want to share. So how do you add a little bit of layer of comfort in saying that sharing your data in this case is actually a positive thing?
So first of all, this is very interesting question to me. It's because my PhD topic is around this, right? So when you look at in-depth understanding of what is that data really going to be, by the way, most of the data today, even if you don't want, is getting shared. That is the reality, right? And data brokers are everywhere, and you know that how it happens. So here, the only thing that we are trying to do is to put legal boundaries around what data can be shared, who can share the data, who can give the consent. So here the user gives the consent. So it is the consent driven data sharing. And I will tell you why this can be useful. So let's say I have my mortgage with one bank and now I want to move from bank A to bank B. Today, I need to go to that bank B, ask for the document required. I need to go to bank A, get the documents back and submit to bank B. Suddenly, because of this, what we are looking at is a scenario where most of the times this process is very cumbersome. It requires more interactions with customer, and believe me, today in manual process, it is more likely that your data might be misused. And when we look at the same thing with consent, which means that here you have registered intermediaries, which we call as, let's say, account aggregator, right? So registered intermediaries are sitting and regulated. They are regulated by regulator in whatever country we are referring to, right? So this regulator will do audit and everything. This is kind of a blind postman, which will encrypt the data and based on the consent will deliver it to the data requester. So you have data provider, you have data requester, and then you have a customer who provide the consent. So in this scenario, when I want to transfer my mortgage from bank A to B, bank B will request me for the data, and this data request I will provide the consent for. It will go to bank A. Based on the regulatory framework, bank A is bound to share this data in a secure channel, and it can only be read by bank B because it is encrypted that way. So now, instead of having something just running in the wild, you are putting process around it, and this is much more safe method of sharing data rather than just doing it manually or doing some other way.
Yeah, makes sense. So I guess that the concern over, the ability to share your data is actually we're putting more processes in place to where you actually have a lot more control over how and when your data is shared, as opposed to the current method where it's being shared anyway, just not by you. Correct?
Correct, correct. And the
Okay.
trust also. Trust factor is very critical. Given that it is regulated, given that there is audit happening, and given that there are clearly mentioned roles and responsibility of all the participants in the ecosystem, you are more likely to have more trust on this ecosystem than the earlier one. And second part is that let's assume that you don't want to share. It is over up to you. You decide. You are the data owner. So ultimately, it makes user-friendly approach and it empowers the user rather than empowering data broker, which they are doing today, any which ways.
Yeah. Fair, fair. So it actually puts the power in the user's hands, which is actually a positive thing for everybody. And I think we can all feel a little bit more safe and secure knowing we actually have control over our data and the ability to share it a lot more seamlessly. So our processes run smoother. So it's more comfortable, it's more convenient, and you have more control over it.
Absolutely.
Here, knowing that you've participated in the Fintech Surge event last year, is there anything that you want to tell our users or our audience about what they can expect whenever they visit the Fintech Surge this year?
Sure, I was very glad that I had attended last year. In fact, when we look at the overall event, the opportunity that you have to meet leading fintechs in this region and making sure that you are part of that live event is very different experience altogether. Given that we are used to now virtual events, and this again face-to-face event has its own charm, so I definitely urge users to join in person, and I again will be there for sure. So look forward to meeting you guys.
Vikram, I mean, I think that we really went over a lot of things today. We discussed, how fintech really, touches everybody. We discussed how it allows merchants to be able to increase their revenues, as you mentioned, reduce costs, adding value, and increasing the size of the pie. It's a way for users to really, take advantage of embedded financials to where, they don't have to, go to 5 different websites just to make sure that they have their travel booked, their hotel book, their taxi book, their insurance book. This all can be, taken care of through embedded finance, which is something that fintech solves. We've discussed, the difference between open banking and digital banking. Of course, they're both positive. Digital banking allows the entire banking experience to be basically brought to you in a virtual digital place, and then open banking allows you to have a lot more control over the data that's being shared, how it's being shared, and what is being shared, which is it's a huge benefit compared to the current state, which is basically your data is not in your control and it's being shared anyway, just not by you. So we definitely appreciate your time, and we definitely look forward to having you here in Dubai in October and visit you at the Fintech Surge in person.
Sure, looking forward to that.
For more details, go to fintechsurge.com and let us know who you would like for us to interview next. Thank you for listening. Until next time.